Welcome back to Property Mythbusters. I'm John Gilmovich from Real Property Manager.
I'm Debra Beck-Mewing from Crave Property Advisory.
Hi, and I'm Ken from Avvora Finance Broking.
Okay, so what we're talking about today is Labor's proposed changes to negative gearing, and the reason why we wanted to discuss it was because we're seeing media reports about the changes, but they're not taking it to the depth that they really need to. So the media is actually covering the fact that negative gearing will only apply to new property after the policy is implemented, but what we want to discuss is what will happen if negative gearing only applies to new property and the impact it will have on the sinister element of the property industry and the impacts it will have on the general public.
Yeah, so the actual cause and effect, potentially making change to a policy which has carried the property investment market for such a long time now. We want to just discuss a few of the pertinent issues surrounding what Labor's going to possibly propose, but of course they have to still pass it through.
They have to get elected first, but we're all expecting that that's kind of a done deal. Let's just briefly cover off what the change will be.
Yeah.
So what they're actually saying is that negative gearing will only apply to new property, and any existing property will not attract that negative gearing treatment. And so for me, that means that the unsuspecting public will think, I have to buy a property where I can, get the negative gearing, so I'll only buy new property. And basically, as soon as they buy it, it will devalue because it will no longer be new, and then they're trapped. They'll be potentially underwater.
So in a sense, it's almost like dividing the marketplace or segregating the marketplace between old and new properties. Kind of like what those changes to the depreciation laws, which occurred last budget as well. It's kind of segregating the tool to maximise the effectiveness of cash flow for the investment property between new and old.
Yeah. So, Ken, what do you think will happen from a finance perspective?
I think it's quite interesting. Over the last two odd years, there's been a lot of focus, and I kind of feel sorry for the investors. They have been kind of singled out, so to speak, and there's been a lot of heat from Avvora with the 10% cap, the interest-only loan, which is still in force. 30% of new business can only be interest only, and then now there's the negative gearing side of things and the tax depreciation. So it's just interesting hearing that all kind of come together. But I know that there are still investors out there looking for opportunities. So I think with the first thing that kind of comes to mind with finance is the serviceability. So some lenders do take into consideration negative gearing when determining how much they're able to, how much a borrower can service in terms of the loan. And when you take negative gearing out of that, it certainly does substantially reduce borrowing capacities. On top of the fact that borrowing capacity is quite tight now, this is just a short-term, I guess, implications of this potential law coming through. So that's how I kind of see that playing itself out. So,
John, what do you think will happen from a rental perspective?
Yeah, so if the limitations on the borrowing capacity, and that means a squeeze on the cash flow of the actual property investor, I guess the first point and I guess the decision and the pressure to put rent up is on the cards, because it's the actual first thing you can actually control. So a property investor would say, well, hang on a sec, this is just affected my cash flow. I'm short $400 a month. Where am I going to come up with that? And the obvious answer is go to the market and increase my tenant's rent. Now that's easier said than done in a market, and we spoke about this 2 weeks ago, that in fact right now, in particular the Sydney rental market, the rents are actually starting to fall.
Yeah.
So you could see
Due to increased supply.
Due to increase of supply, correct. There's back to the supply and demand factors, that tenants now know that rents are in fact decreasing and not increasing. So why would they cop a rent increase on the chin? It's questionable.
And so, take that one step further, and it's almost like you're just perpetually building new stock, and we'll leave a legacy of old property just vacant.
Yeah, well, again, it's kind of segregating that market. I mean, old properties tend to now struggle in this market right now, especially those on the rental market, when they're competing with newer, shinier objects, brand new apartments that are pretty much on par with the rent values of the old ones. So it's a no-brainer. If you have to choose, the marketplace would choose brand new overall, but not wanting to pay any more for it.
Yeah.
Just thinking about the vehicle as an asset to build wealth and things like that. I think it might be interesting because there'd be a lot more activity or attractiveness from an investor's point of view to look at the new property. Liquidity could be an issue for people who have existing properties. So if they're thinking of moving on or augmenting, and I've got a client here who's wanting to kind of augment their property portfolio from a capital growth to a cash flow one. It could be interesting for property investors to do those type of things. So I don't know.
But what I think is interesting is that Labor have said, and I know we're not supposed to get political, but the idea behind the change is to actually help more Australians buy their own home, and it's actually going to cause more trauma for people who are actually trying to build wealth through property,
right? Because
they will. It's the unsuspecting, the uneducated people will get caught in the net of the spruikers.
With the tax incentives and things like that for new property? Right.
And the type of property that the developers will build, like they're building smaller and smaller properties, and so bigger families, where are they going to live?
Exactly. Well, I mean, they're definitely, if a policy which is proposed to segregate and advantage brand new property, then you can see how where the sales agents out there, and especially the spruikers in the off the plan sales market, this product all of a sudden has a huge light shine on it, because that's the most advantageous path to go down and buy a brand new property, because it's got that tax effectiveness through negative gearing. But as a property buyer yourself and as a strategist, you know that negative gearing shouldn't really be on top of your list when you're considering an investment property. In fact, this should be way down there, down the list of your due diligence, and seen as a bonus rather than an actual strategy and the reason why you're buying a particular property. There's so much more to it.
Yeah, and for our clients, we've always really focused on that neutrally geared or positively geared type of property where it's agile. So an agile type of property means that it has future uplift, often a number of steps, so turning it into a multi-income property, which is the whole reason that you should be investing to supplement your income or to actually replace your income. And so, like, maybe that will be one of the positive offshoots, is that generally in Australia we'll have a reasonable conversation, and people will get to understand what the differences are, and hopefully the light bulb will come on, and people will realise that you're actually supposed to invest for quality returns, not the supposed negative gearing, which is like just.
I've been to them. You've been to them. You've been to them. We've all been to the property seminars where there's a guy on stage is pushing the whole negative gearing aspects of the property purchasing and its tax effectiveness, but they're yet to disclose that really, at the end of the day, you're only getting about 30 cents in the dollar back.
For every dollar that
for
you're losing.
every dollar that you're losing, but the bottom line is during the year you're still making a loss.
Yeah.
So the question is, can your personal cash flow sustain that loss?
Yeah. Well, it certainly can't if you lose your job.
I don't think it's sustainable for the average mum and dad punter.
Out of curiosity, thinking about it, because you mentioned, John, that the rental market, there would be pressure for rental in Sydney and or across Australia to increase. Do you think there might be a possibility for, like an unintended consequence would be for landlords to look at, because you mentioned multi options to kind of bring different revenue streams, to start to sublet and lease out rooms specifically as opposed to whole homes, and that could drive a completely different.
Yeah. I mean, good point, Ken. I mean, at the end of the day, the property is a vehicle to give you returns.
It should be.
And if the returns are diminishing, investors are going to have to get creative with where they get their cash flow.
Right.
So they might be looking at possible short-term lettings in the right markets. We know the evolution of Airbnb and short-term stays coming in and disrupting the ordinary rental market. And though it's really early days, in some parts of Sydney, for example, that's had a profound effect. With withdrawal of tendencies from the normal rental market and into short-term stays to drive stronger and better returns.
Right. That could be interesting.
So that could have a negative cause and effect on the overall rental markets, because if you're withdrawing accommodation in a tight market, that could have negative effects on the overall rental market.
Yeah.
And I guess what those people who are buying and renting, who normally have a lease in place and then they sublease it to kind of help spread the costs. I mean, if the landlord is doing that directly themselves, the savings might not be there, and then that could impact their ability to save a deposit for their first home. I don't know.
Well, clearly there's lots of different points to this potential change, but as we're just about to run out of battery power, maybe we should say goodbye for now. So,
and we'll pick this up again.
Yep.
As there's more news rolls out, and I'm sure there will be as we approach 2019 state elections and federal as well.
2019.
It's a big year. It's going to be a big year of change, and certainly property is a political football at the moment. So
front and center.
I look forward to updating you.
So thanks for watching. If you would like to follow us, you can certainly apply to follow the group and catch us on any of our social media channels. Thanks. Bye.
Thanks.
Good to see you. Good night.
No, just finish down the bottom.
All right.